In this week's Fastest 4 Minutes in Finance, a look at where investor money is flowing. Hello and thanks for joining us. I'm Scott Inman. At the time of this recording, the S&P 500 index is up 14.8% year to date. The Dow is up 6.1%. The NASDAQ up 17.5%. The Russell 2000 has climbed 9.9%, and the yield on the U.S. 10-year bond is up more than 9%. It's been a great year so far for most options that investors have. Well, today we have a couple of charts from the LPL research team that will give us a more in-depth look at where investor cash is flowing. The charts measure in billions the net inflows or outflows of a particular asset class or sector through the first 6 months of the year. Now, before we get to that, here are some numbers from just June. The largest inflows were into foreign large blend equities. $8 billion was the net number here. LPL tells us this is the continuation of a trend, and you'll see that in the upcoming chart. 3 of the next 4 top categories were fixed income. Long government gained $5.5 billion, corporate bonds inflowed $4.6 billion, and ultra-short bonds increased by $4.5 billion. Again, that's just in June. Let's take a look at the inflows and outflows year to date. The first chart measures asset classes. At the top of the chart are the biggest outflows. Large value funds have seen the biggest drop. $18.1 billion has left this asset class in the past 6 months. As LPL points out, it's not a surprise given the outperformance of growth stocks this year. At the bottom of the chart, you can see the biggest winners. You can see that intermediate core bonds and large blend funds are at the top. Intermediate core bonds increased by $69.1 billion this year so far. And if you add the third highest inflow on the chart, intermediate core plus bonds at $30.1 billion, you can see bonds are clearly back in favor. And this makes sense as well, since the expectation is that the Federal Reserve will cut interest rates soon, which would be good for the total return of bonds. Remember, if interest rates go down, bond prices go up. And our final chart shows inflows and outflows by equity sector. Again, no surprise winner here. Technology is leaving every other sector in the dust. $17.1 billion flowed into tech this year, and it hasn't slowed down much. It was far and away the top sector in just June as well. This coincides with performance. Technology stocks have outperformed other sectors for the past 2 years. But the emphasis on tech has detracted from almost every other sector. You can see there, industrials and financials are the only 2 sectors outside technology to have positive inflows for the year. Healthcare is at the bottom. $9.9 billion has flowed out of this sector, and LPL says investors have continued to rotate out of healthcare because of slowing COVID-19 related sales, patent expirations, and election uncertainty. Now, these charts should not be used to make your investment decisions, and we are not making recommendations here. This is strictly for informational purposes. You should work with a financial advisor to build an investment strategy that fits your overall plan. Thanks for watching. Want to become smarter financially in 4 minutes or less? Sign up at fastest4.com to get insights and updates like this delivered to your inbox weekly.